Good morning and welcome to the ADS Securities Markets Update. We'll start today with an overview of the economic releases this week, and especially those from the US, which continue to support the idea of a pause by the Federal Reserve in its next meetings. And there were also many economic releases since the beginning of the week. However, the markets continue to trade within the same tight range as or ahead of the key event for this Friday from the US, basically, which is the US jobs report. Beginning with the major events yesterday in the US, the Chicago PMI confirmed a recession in Chicago after the index contracted for the second month in a row toward or at 46.3 compared to 45.8 last month. And this is despite the fact that the estimates were to rise toward 52.5, and this is also the first time the index contracts for 2 months in a row since 2009. Despite that, the CB consumer confidence increased toward to the highest level in 2 months, almost toward 101.3 compared to 98.6 last month, which kept the US dollar gains also stabilized. And as for the Asian session today, or as for the Asian session or the previous year's Asian session, there were a collection of economic releases from Australia, Japan, and even China, which had also another notable impacts on the market, and most of the equities sold off during this session. Beginning with Australia, the AIG manufacturing index increased toward 46.3 in March, up from 45.4 in February. However, and most importantly, we had the building approvals, or the building permits, which basically have fallen by 3.2% in February after rising by 5.9% in January, while the estimates were to decline only by 3.8%. However, this is the biggest, or the first and the biggest monthly decline since September of last year. In Japan, the Tankan manufacturing index also stabilized at 12 in Q1 of this year, while the estimates were to rise further toward 14 points. However, the non-manufacturing index also improved toward 19, up from 16 during the same period, comparing Q1 compared to Q4 of last year. Finally, the final manufacturing PMI also in Japan has been revised lower again to 50.3 compared to 50.4, which remains at the lowest reading since June of last year. In China, the HSBC final manufacturing PMI also has been revised even higher again toward 49.65, up from 49.2, which is also higher than the market estimates, which were basically to rise toward 49 or 49.3 only. As for the European session ahead, there are many economic figures will be released during the session, but the main focus will be on the manufacturing PMIs for many Euro area countries, including Spain, Italy, Switzerland, Germany, and the UK, and what's likely to have also is expected to have a notable impact on the market. But the estimates are mixed. Spain, Switzerland may weaken a little bit, while Italy and Germany, and in addition to the Eurozone, is likely to stabilize. And finally, the UK may rise toward 54.5, up from 54.1, which would be also the highest reading since July of last year. Going forward to the US session, another collection of economic figures will be released today, which is likely to have a major or notable impacts on the market. However, the impact is likely to be short-lived, as I noticed again, or as I noted it before, as all eyes are headed toward the US jobs reports on Friday. Starting with the ADP non-farm employment change, the estimates are to rise by 227,000 in March compared to 212,000 in February. The final manufacturing PMI also may remain stable or unrevised at 55.3. However, the ISM manufacturing PMI may decline again toward 52.5 in March compared to 52.9 in February, which would be also the fifth monthly decline in a row and the lowest reading since January of last year. Moreover, the construction spending is expected to decline again by 0.1%, which we believe also that might decline even lower or even more than that in February compared to another decline of 1.1% in January, which would be the second monthly decline in a row not seen since the beginning of last year. This is it for today. You can follow us on our social media sites, Twitter, Facebook, YouTube, to get the latest economic releases, reports, and analysis, in addition to a full review of what happened for the past week, or since the beginning of the week until today, in addition to some new trades that we're waiting for ahead of the US jobs report. This is it for today. I'll see you once again tomorrow. Thank you so much for watching.